So I'm just kind of watching them try to base out, because the thing is, we're watching the gold miners, and the miners continue to make lower lows, and they tend to lead the price of physical bullion. And if they're heading lower, that probably means gold is likely to flounder or continue to head lower as well.
What might make you gains today may not necessarily be the safest asset tomorrow. Well, that's the theme of our discussion with Chris Vermeulen, Chief Market Strategist at thetechnicaltraders.com. And we'll be talking about gold. I was hinting at gold, Chris. Welcome back.
Hey, thanks for having me, David. Always a pleasure.
Crypto stocks have made a lot of people rich over the last 2 years. They've also bankrupted a lot of funds in the last 3 months. Gold, however, hasn't really done any of those things in the last year and a half, or should I say just 1 year. But perhaps that is where you need to go right now. Perhaps what's boring is what's needed for investors at this particular point in time. I say boring because gold hasn't really done anything in the last 2 months since we spoke. Chris, what are your thoughts?
Yeah, I mean, gold's out of favor. Precious metals, miners, they're all out of favor really this year, and not a whole lot has changed in the past month or two. To me, they're kind of a dead money at this point. I think there's going to be a time when they really will shine, and we almost saw that early this year. They were starting to take over, but we saw panic selling hit the stock market, mass liquidation, and it pulled them down, which is what always happens when we see that type of selling in the stock market. Right now, I don't see them as an opportunity right now. I think as a trade, they could be really good in a month or two. So I'm just kind of watching them try to base out, because the thing is, we're watching the gold miners, and the miners continue to make lower lows, and they tend to lead the price of physical bullion. And if they're heading lower, that probably means gold is likely to flounder or continue to head lower as well. So I'm not too excited about it at the moment.
You know, it's interesting. You're telling me offline, a lot of people are heading into cash right now, probably because sentiment right now for the overall markets is fearful, anxious at best. I wonder why people will go to cash though right now and not something like gold or even high yielding debt, for example. I mean, we have real interest rates that are still negative. In theory, your cash should yield a negative rate of return right now. So I don't know why cash is the best place to go. Well, I don't know if it is.
Yeah, so everybody's got their own view of cash, and a lot of people think it's not a position. They think you're going backwards with inflation and negative real rates. But the reality is, going to cash for a few months here and there isn't going to kill you. It's not like you're holding it for a year or two and you're going to spend all that money with high inflation. I think this time around, we're seeing record amount of cash being stockpiled. There's been a lot of talk, a lot of articles on it. And I think that's because the general investor, the masses, the big money that really continues to float the stock market naturally higher, those investors are getting really nervous. And the fact that stocks are going down, they typically will start to move and shift to bonds. But now bonds aren't acting as a safe haven. And so they don't know what else to do, because most of these are baby boomers. They have a lot of money. They don't want to move into very risky stuff. So they're just moving to cash. And that's why I think we're seeing this big stockpile. It's usually stock and bond portfolio. If both aren't working out, their next common sense play is to move to cash. A lot of people are very nervous to get into anything that's aggressive. Growth stocks have been down since more or less March of 2021. Precious metals markets had quite a pullback. So everybody's a little spooked. And I think the big money just wants to sit in cash for the time being until they figure out what do they do with rising rates, bonds falling, because it is a big shift. I don't think a lot of people can remember what it was like when, bond rates were rising, 40 years ago. It's beyond most of us.
All right. Can we go back to your diagram one more time, the cycles? I just want to point out something here. All right, so it kind of looks like a bull cycle going down and then retracing. But couldn't you make the argument? You said that gold is kind of looking like stage one right now, and stage one in the past has rallied after the basing period ends. But couldn't stage one also kind of be the same thing as stage three, in the sense that you've got a topping formation that kind of bases and then it pulls back and goes into a decline? Could that happen, Chris?
For sure. I was actually glad you're going to bring that up, because let's take a look at the gold quarterly chart, and we can touch on that in a little more detail here. If we take a look at the quarterly chart of gold, and we'll just zoom in a little bit here. Gold, it's in this scenario. Actually, the weekly chart is I think the best view here. I'll show you what I'm zoom out a little bit. So where we are with gold right now is we're in this potential, you could argue it's in a new platform. It's kind of regrouping, hopefully going to go higher, but it is also at a point here where it could be putting in a major topping phase, which is this over here. We saw 2011, 2012, huge bull market rally, consolidated in a bull flag, started to break out, and then it came back down, and then it broke down and went dormant for years. And we're actually in a very similar scenario. We've had the rally up. 2019 was the big breakout. We've had this like kind of bull flag pattern. It's kind of popped and broke, and now it's coming back down. And the big scenario is going to be here. Is this a platform to go a lot higher? Are we just starting a major super cycle for gold, or is it going to break down and have a huge devaluation event? And that's what I'm worried that might happen if the US dollar skyrockets to 120. And if we go into a bear market with stocks, the liquidation of stocks and portfolios is going to cause gold to come down. So if we go into a bear market, it's naturally going to pull gold down. And then we got the dollar potentially ripping higher, which could also pull gold down even further. So I love the long-term chart of gold. It is primed and ready for a huge rally, but we need to see it break above this bull flag pattern and get above 2000 and start muscling itself higher, because it could go either way right now. So you got to be very aware that it's in that potential stage 3 or stage 1. Either way, it's a consolidation.
Yeah. Okay. So we're definitely stage 1 or stage 3. It's up in the air right now, but what's the kicker? You said the dollar needs to move higher for gold to go down. Is there anything else, Chris, that would make you think, okay, it's either stage 1 or stage 3 breakout?
Not really. I mean, right now it's just in this pattern that, we just need to see which way it's going to break. There's always a consolidation can be seen as a stage 1 or stage 3 at any point. So at this point, to me, it feels like we're starting a bull market phase. It's been a year and a half long consolidation. All of this is technically at this point is a pause before it goes higher. But if we get that perfect storm where equities go into a bear market, the dollar goes higher, it's going to pull gold down, and there is potential for gold to unwind, 1400, 1300 if it breaks to the downside. So we got to see which way gold breaks here. What
about the upside target for you? If it does break towards the upside, where are you expecting it to go? Where would it go?
2,600, 2,700 will be the upside for gold. None of that has changed in a year, really. The upside targets remain the same. The downside target is, that 1,300 in the perfect storm of gold wiping out the 2019 and 2020 rally.
Is it kind of a binary? It goes either war 2,600 or 1,300. It can't just stay flat forever. Let's not say forever. Forever's a pretty loaded word. Maybe in the next 2 years or so. Let's say the next 2 years or so.
It could very much so trade sideways. I think in a perfect world, it would just keep trading sideways if the stock market, becomes very weak and sells off. Maybe gold will hold up fairly well and create a bigger launch pad. The bigger the launch pad, usually the bigger the rally going forward. So
I see.
The longer it could trade sideways here is a good thing. Just like we saw right down over here on this chart where we saw this multi-year kind of stage 1, as soon as it breaks a multi-year stage, it goes into a multi-year rally. And so the longer this flags out here and builds the platform or creates a stage 3 or stage 1, the bigger the next leg is going to be, the more powerful it'll have when it breaks. So we just have to, this is a big pattern. It's taken a long time to play out, and it might not break out this year. So
I know you don't trade on emotions or gut feelings, but just based on the technicals here, does the momentum look more likely to pass on the upside or the downside? Just currently.
For gold and miners, I feel like I think they're going to naturally want to head lower. They might have a bounce for a week or two, but I think they're still going to be grinding lower, and they're out of favor.
And the gold miners, well, let's talk about the gold miners now. We were talking offline about how they could be a leading indicator for the gold price. Now, it's occurred to me that you've got two kind of forces tugging away at the gold miners this year. You've got the gold price itself, but also the overall markets. The stock markets have not been doing well. I wonder which has been a stronger force, because keep in mind, gold has been relatively flat year to date, even though the stock markets have been down a lot. So what's been going on with the gold miners?
Yeah, I mean, the gold miners just can't catch a bid. They continue to just see an endless stream of kind of selling, and I think we're getting pretty oversold for miners. I feel like we're kind of in this phase where it's put in its time. I think we're going to continue to see it struggle, trade sideways or lower here for some time. There's a lot going on that is just making it difficult for these to go higher. I think there's going to be a great time where they have a huge rally, but right now they're clearly in a downtrend. Lower highs, lower lows. They're leading gold and silver prices lower.
Yeah.
They're just out of favor.
You know what occurs? So the correlation is very strong between the gold miners and the gold price, but the magnitude of change is completely different. Take a look at where gold, the GDXJ right now peaked at around $64, $65 in 2020. That's when gold peaked. Okay, we understand gold trailed off a little bit since the peak in August, but gold peaked at what? Around $2,000 an ounce, and right now we're $1,800. That's a 10%, 11% decline from its all-time highs, right?
Yeah.
But the GDXJ is down 50%.
Yeah, it's huge.
I understand I understand that there's a higher beta, but that's a huge differential.
Yeah, it's given back everything. Exactly. They're a fast moving sector.
Yeah. So I mean, Chris, what do you think? Is it oversold now, or is it where do you think that maybe the sector is just, like the emperor has no clothes. You take it away, everything looks naked, right? You take away the gold price strength, and the sector is just weak underneath. What is it really?
Yeah, it's a really ugly chart. I mean, there's lots of volatility, huge price gaps, huge spikes, all kinds of noise. When you look at these highs here, higher highs, and you got lower lows, it creates this kind of megaphone pattern. And all it's telling us is that volatility continues to expand. There is no real direction. You don't know if it's going to make a lower low or a higher high at any point. It's a really ugly chart. To me, it still looks bearish or sideways, probably at best, for another few weeks. It's just, it doesn't look good.
Yeah, it doesn't look good. So is it the same thesis as gold then? You're expecting a little more downside in the short term?
Yeah, I think gold and miners are going to trade sideways to lower for the next couple of weeks potentially. And then we're going to have to see what the stock market does. The stock market could either start a huge rally, which if it does start a big rally, believe it or not, I think it's going to put pressure on gold and on silver. People are going to be like, oh my gosh, we're back into a bull market. And people are going to dump their what they think are defensive plays, the gold and silver miners, and they're going to be, I want to get back into the ARK ETFs or into TAN, like the solar, or get into biotechs, which are all coming to life, by the way. They're all top leading sectors right now, rallying 30+%, a lot of them in the last week alone. So there could be a shift of everyone going, you know what, I'm getting back into growth stocks and forget gold and silver. They haven't worked again for another year. I'm moving somewhere fresh, right? So that could create more selling if we get a stock market rally.